What is going on, everybody? What's going on? What's going on? So we're going to do a little bit of a live right now. I'm going to start going through some levels, some charts, kind of get ready for tomorrow's session, right? So I'm going to just give it a couple minutes, see if anyone joins right off the bat, maybe a couple minutes here, 2-3 minutes. Just going to kind of look at the overall markets. What we're going to be looking at, we're going to go through a whole, flurry of stocks, right? All the stocks that I like to trade, starting with the NASDAQ 100 stocks first. We're going to take a little bit of a look at the SPYs. We're going to even take a look at the small cappers and kind of see exactly what they are doing. But, I just put out a video, maybe 10, 15, 20 minutes ago on YouTube, kind of talking about something that could potentially kind of save, your trading career, especially if you're a retail trader, especially if you trade on the side, especially if you trade by yourself and you don't really have a community or a mentor or anyone else. You really got to be careful with who you listen to, who you're following on social media, just because of the fact that a lot of traders who kind of spit and spew their nonsense kind of give you the personal bias, right? They're not really looking at technical analysis. Let me take that back. They look at technical analysis, but they put their own personal bias behind that, right? So that's what happens when you have traders who haven't been trading that long, maybe just a few years, maybe came in around the pandemic, maybe we've been trading for a little bit of time. What you kind of have to learn and understand is that you have to go with the flow of the market, right? You got to go with the flow of the market. You can't simply, right? You can't simply guess where this fucking market is going, right? Especially if you're a newer trader. Just because, I don't care who it is, right? And you guys can go back and watch that video I just uploaded. I don't care if they've got 10 million followers, if they've got 10 million subscribers. If someone is coming in and they're preaching that all, the world's coming to an end and everything's going to hell in a handbasket, and, today feels like it's a day to short the market. Today feels like, we're going lower, makes absolutely no fucking sense, right? Now, again, these are also the same people who will come on if the market is down 100 points tomorrow, will sit there and tell you, I told you it's time to short. I told you you should have been short. Meanwhile, today, they've done nothing but get their asses blown out each and every single hour that the market has been open today. So regardless of what the market does tomorrow, why not extract money, right? Extract whatever you can today, worry about tomorrow. That's just my biggest pet peeve. It's my biggest rant, because going through Twitter, and I'm not really on Twitter a lot, but just going through Twitter, I see a bunch of crap that pops up on my feed from people I don't even follow necessarily. And that's besides another point. But you see so many people, why isn't the market going down? We've got this level. I've seen so many people saying that 411 on the SPYs, the market's going down. 411, it's time to start shorting. You got your ass blown out for another almost 2 points, right? Almost 2 points from 411. So instead of trying to constantly time the top and time the bottom, why not just put your risk on the table and kind of manage that risk accordingly with whatever the trend is showing you? If you do happen to go long when technically on the inside you feel like the market is going lower and you do get blown out, well, then that's the name of the game. You're going to lose. You're going to lose trades. Every trader does not win 100% of their trades. Personally, I do this full time, been doing this full time for almost 6 years. It's 5.5 years. I've been trading for around 8.5 years, going on 9 years. The first year was absolute shit, right? Didn't make any. I would make crazy gains. I used to trade small caps. I would make crazy gains, give it all back in one session. I'd have a great fucking month and then I'd give it all back. The second year was all about learning my emotions. I kind of started to dial in on the system that I'm currently trading now. Started to dial in, but then I would go on full tilt. I would make some money, I would give it back, I'd try to make it back really quick. It wasn't until I kind of let all that nonsense go, understand, and started to, really get a grasp on, hey, you know what? I don't have control of where the market goes. I have no control if the stock is going up, have no control if the stock's going down. What I have control of is, when am I going to push that fucking button to get out of the trade to take profits, or get out of that trade and take the loss? That's it. Whatever happens in between is going to happen in between. And that's what you guys kind of need to follow. But kind of just getting back to my point here, and I'll pull up the SPY because this is what a lot of people were talking about here on the S&Ps, right? So if we kind of look at what was going on with the S&Ps, and I'll blow this up so we can kind of see it here. Again, it's not going to be the clearest because I got you guys in a little box on the left hand side, but I'll try to make it as big and as clear as I can make it, if I can get this shit to cooperate, right? So let's see how good that is. So if we're looking at the SPYs, right, if we look at what we did in the pre-market session, we had some numbers, we had some data coming out in the pre-market. We kind of put in that first initial pop higher in the pre-market, and we kind of set the tone, right? Set the tone. If you're not looking at pre-market data, I would highly recommend to start looking at the pre-market data. It's going to give you great levels. What we're looking at here is the hour time frame chart. Now, what I'm going to do, because I'm a day trader, right? Very rarely am I going to swing trade. If I'm holding any position overnight, it's simply because the position is so far in the green. I've got a stop loss at break even, and I've already taken profits, and it's a no lose trade for me. That's the only time that I swing overnight. I don't play earnings. I don't play, trying to catch the news pops and all this other nonsense. I just play the charts, and I play them on a technical level. So if we're kind of looking at what we did in the pre-market, came up to this Bollinger Band here, made a quick pit stop, and then we kind of pulled back a little bit. At no point in time did we lose the pre-market sessions lows or the after hour sessions lows from yesterday, right? So the market kind of closed down. We put in a new low after the market closed, and then we kind of just did nothing, in the overnight session. We let those London boys just kind of consolidate around for us a little bit, and we never really lost these lows. So for me, the way that I trade, based on, I'm going to use all my levels on the 1 hour time frame, and then I'm going to simply scalp using the 5-minute time frame to kind of manage my trade after that. This never gave us any type of indication or any type of indicator, any type of technical analysis that was showing us that we're going lower today. So when I see people say that I feel like we're going lower, makes absolutely no fucking sense, right? It just doesn't make any sense. Now, I'm not saying that every single trader out there was trying to short or trying to top the market today. I'm not saying that. But what I am saying is that I did see it a lot today on social media, and a lot of people were calling for a 411, right? A 411 level here, 411 and some change. And I kind of see where they got that from. That 411 was like that second rejection spot that we had from yesterday between 411 and 412. We had a big area of supply there, but that was yesterday's data, right? Yesterday's data. So yesterday, the pre-market, in the pre-market session, we put in a high of 413.75, which we're actually approaching now, right? So we're coming right back up to where we started yesterday. And then we kind of sold off, right? We sold off yesterday. But if we kind of look at that 411, that 412 mark, I get what you're saying. Like, I get what they're saying in a sense where that could be an area of supply where we're going to want to go ahead and try to short the market. But when the day's trend has been nothing but green, it doesn't make any sense to go against the grain, right? It doesn't make any sense to go against the grain. If we kind of look at, this first true hour candle, right? So the way my candles are going to be set up here, this first indecision candle here, this little red candle that we have, is 6 a.m. Pacific Standard Time. I'm in California, so my time frames are going to be a little bit different than yours if you're on Central Time or the East Coast Time. So I'll speak everything in Pacific Standard Time just because, I'm not, whatever. My brain's already fried. It's the end of the week. So if we look at this 6 a.m. candle here, we pulled back a little bit into supply. We never lost the pre-market session lows. We never lost the after hours lows, okay? All we did was put ourselves into a holding pattern that first 30 minutes of the market. Now, that first 30 minutes of the market, there really shouldn't have been too many trades going on, long or short, unless you're a hyper scalper who's going to take 2-3 points, 5 points off the NASDAQ. You're trading futures, you're trading the Qs or something, and you're going to get in and you're going to get out really quickly. I would definitely advise against that if you're a newer trader, you have a smaller account, but if you have 6-figure account, you're on margin, you've got plenty of leverage to kind of get in, take 2 or 3, 4 points on the NASDAQ or on the SPY or whatever that index that you're playing, or you're playing futures, that's completely fine. But technically, there was not really a reason to go long or short that first opening range, that first 30 minutes of the market. Now, I tell everyone that trades with me, in my community. If you're a newer trader and you don't really can't handle the emotions of, you know, the first 5 minutes, the first 10 minutes, the first 30 minutes even, I would always recommend just sit out for the first 30 minutes. You are not going to miss a thing. You might miss $1 here, 50 cents there, but if there's going to be a trend and the day's going to go, whether it's long or short, you're going to make your money regardless, even if you sit out the first 30 minutes. And I'll kind of play that out for you right now as we, you know, look at this chart here. So if we look at the pre-market session highs here, 409.96 on the SPYs, we then pulled back. This first opening range candle gets confirmed at 7 a.m. Not only does it take out the opening range highs, but starts to take out the pre-market highs of around 409.93, 409.95. As it takes those levels out, it then starts to push and put in a new high all the way up to 410.90. Now, depending on what your position sizing is, that was a $1 move within an hour. Right? $1 move on 100 contracts, your day is over. You know, a $1 move on 10 contracts, depending on what your goals and your motives are, could be, you know, a one and done type of trade. But if you kind of look at the overall macro picture on an intraday perspective here using the 1 hour time frame, we got above this Bollinger Band and we hugged the upper Bollinger Band the whole way up. Okay, the whole way up. We didn't even come down to test the rising power trending SMA, which is the 5. We didn't even come down to test it until the 10 a.m. candle. And we came down and tested it very briefly at 411. So while everyone was trying to short this 411 that I seen on Twitter, and Twitter's the worst, right? So I was looking at everyone saying, you know, buy puts, market, you know, whatever. I seen a bunch of people saying, you know, 411, 411.50, 411.70, whatever, start shorting. If you would have shorted here at the high of day at around 411.57 on this pullback, right? And I know a lot of traders did that because I seen it on Twitter in real time that they were taking puts here at 411.50s as we were pulling back into the rising 5-day moving average of 411.10. So not only did we pull in 40 cents, but it just ripped their faces off for another, you know, $1.50, right? In 1 hour, $1.50 in 1 hour, they got destroyed. So if you tried to short every single hour's tops, you got destroyed all day long. So why go against the trend? It doesn't matter. So if tomorrow we pull down and we're trading at 409 tomorrow, then we'll catch the short tomorrow. I guarantee you 100% that if the SPY sells off to 409, 408, 407, you're going to get a setup. You don't have to start shorting it now. You might as well make your money, extract money, take money out of the market going long today. And if the market does decide to pull back tomorrow, we are going to get a setup. That's what I want to make clear to newer traders specifically. Don't feel rushed. There is no rush. You are not missing out on making any money by trying to time the top or trying to bounce the bottom. You will make money in between. Just give it time and get yourself a good setup, right? So as we see over those pre-market highs, we had open skies. It was open skies here from around 410 all the way into 412.90s, 413, right? So that's exactly where we're trading at. The next area that would be a major area of kind of supply is going to be the 413.75s. That's kind of where we topped out yesterday. But overall, all in all, I can see us coming up to the 414, 415 area, then pulling back into 413 and then going up to 416, right? If the market's going to continue to run. If it doesn't, we'll have a little bit of a short here for scalpers between 412.50s all the way down to 411.70s, and then anything below 411.70s has room down to 410.30s. So there's micro scalps on the way down. However, understand you are going against trend on those scalps. So the move doesn't have to go. As of right now, the trend is higher. So we want to continue to play with the trend. So I'm just going to kind of I'm going to go through my normal routine here, and I'm going to look at some stocks that I'm going to get ready to trade tomorrow. I'm going to start off with the daily time frames here. Daily time frames on the S&Ps is a breakout. We have been in a holding pattern 1, 2, 3, 4, 5, 6, 7, 8 days. So the past 2 weeks of trading, we've been in a holding pattern, consolidating sideways. We're now starting to break above that level here. Again, we don't have any supply until 414.50s. Okay, so 414.50s could be the next stop before we do pull back. Going into next week, anything over 415, 416, 417 could be the next stop. That's what I would be looking at on the S&Ps. Again, we don't really have a short until we lose 408 and then lose 407. Those are the two levels you want to watch. That's when you have a lot of room down to 402. That's the short position you want to be involved in, not trying to time the top intraday, as the market is trending higher. If I quickly just look at the weekly time frame here, look at the weekly candles on the S&Ps breaking over last week's highs, kind of breaking out of this consolidation period. We've got room to 420. I could see a significant push into 420 before we do have a back test. But again, all bets are off if we do close over 420. 430s, 435s will definitely be in the table. And even if we do decide to come down and kind of, make this majestic low that everyone is thinking, then, we're still going to have to take out macro levels and we'll get those setups, right? We're not going to lose money, trying to take this short now when we can you can get blown out for another 5 points on the S&P. So let's quickly take a look at the triple Qs, right, which is going to be the NASDAQ 100. These are the stocks that I like to trade. Again, still got my breakout downtrend line here going back 5 weeks. If we look at what's going on the weekly time frame, right, if we look at what's going on the weekly time frame on the triple Qs, not only did we come down this week and test this 5-day moving average, we are pushing up higher. So as of right now, we still have room to around 322. Okay, so if we do continue to push, or there is some sort of continuation tomorrow before the week is over, we could potentially get into that 321, 322 area. Again, stop crying and hoping that the market goes down. Go with the trend. When we get the trend, the change in trend, we're going to get those setups that are going to clearly identify to us when it's time to start taking short positions. Unless you're a scalper who is looking to short these 1, 2, 5 minute kind of intraday pullbacks very, very quickly, and your experience and your account size is huge where you can take multiple trades, please just leave the shorts alone until we actually get this ball rolling off the fucking ground here. Again, be careful, be cautious who you're listening to on social media. Like I said in the first 5 minutes of this live stream, be careful. So many people were trying to short SPYs at 411 today. Did make no sense. They got their asses blown out for 2 points. Like, it doesn't make any sense, right? So if we kind of zoom down here and we go to like an intraday kind of look on the triple Qs, again, triple Qs chart looks exactly like the SPYs chart. We got over this pre-market high session here. The first hour candle, I understand it's probably a little bit squished on your guys' end here, but the first hour candle here at 6 a.m., right? Market opens at 6:30 in California. 6:30 a.m. we put in this high, we close at 316.14, currently trading at 319.18. $3, did not even have a downtick today. Every single candle has been green. Every single candle has been green. Okay, it's been an open sky since we cleared out this 200-day moving average on the 1 hour time frame. So over 317.50. Even if you wanted to wait for a little bit more confirmation, like some people like to wait for more confirmation. Okay, 317.50 should have been a go. As soon as we confirm that level here, we need to kind of go with the trend now. Start believing that we're going higher. Don't assume that we're going lower. It's like this. If you're looking at an intraday chart, right? If you're looking at an intraday chart, pull up the hour candles. If that ticker, index, stock, whatever it is that you're trading, is trading over its 5-day moving average, there is no short. Okay, there is no short. Now, if we kind of go a little bit fast forward here, the 10 a.m. candle came down and tested, bounced perfectly off of the 200 as well as the 5 SMA on a 1 hour time frame. Let's play devil's advocate here, and let's say that we came down and we closed at the bottom of the range, and this current candle, the 11 a.m. candle, starts to confirm that low. Okay, is that a short? At that point in time, we can try to take a stab at a short position using a previous 5-minute candle's high as our stop, or the previous hour candle's high as your stop, depending on how much risk you want to put on the table. And then you have to understand the trend is higher, right? We could pull back. What is that next level that we could potentially pull back to? The next level that we could have potentially pulled back to was 316.55. So even in that trade, there was only around 75 cents in the move. Now, I don't know if 75 cents is enough for you, if you're going to be happy with taking 75 cents off the table. It kind of depends on the situation and where you're at on your P&L for the day. If that's your first trade of the day and you've been waiting to short, well, you know, your bias and your emotions are going to be a little bit different than someone who's up $500 on the day's session and just looking to take a quick scalp. So towards the end of the day, I took a scalp long on the NASDAQ 100, and I only took 40, 50, $60 out of it, right? It was like 55 something, right? Because I was already up over $500 on the day. So your trading kind of size and positioning and your mentality changes the farther along in the day that you get. Now, if I didn't take any trades, I would have probably held a lot longer just due to I'm trying to stretch my P&L out a little bit more. But when you're already profitable, there's no real reason to kind of keep being so greedy and trying to make millions of dollars in one day. Because it's like this. I'm able to pay my bills, pay my car payments, have insurance, put food on the table, still enjoy my life, go out, do things. And I'm not going to sit here and tell anyone that I make $5,000 a day. I would never tell anyone that. I would never tell anyone that, in order to be financially free, that you need to make, $10,000 on a trade per trade, taking 500% gainers on options. It doesn't really work that way. You don't really need to do that, right? I understand everyone's goals are a little bit different, right? And the only thing that kind of changes that finish line marker is how much size you're actually putting on. So just to be completely transparent, my sizing when it comes to trading options is 10 contracts, right? 10 contracts on the biggest stocks that I play. The biggest stocks that I play is Tesla and Nvidia. I play them like religiously, right? So Tesla and Nvidia, my comfortable sizing is 10 contracts, right? On something like AMD or Apple or a smaller name like I don't know, AMD and Apple, I will play, and I might bump it up to 15 to 20 contracts, right? Something like Microsoft will be 10 contracts. Something like Meta will be 10 contracts. Amazon would be closer to 15 or 20 contracts. Because for me, on an emotional level, on an emotional scale, that's comfortable for me. I can manage that risk accordingly. Now, does my account size allow me to trade 40, 50, 100 contracts even? Sure. But that emotion that comes along with playing that much is unbearable for me, right? And everyone's different, right? So what I want a lot of newer traders to kind of get away from is, let's say, your account size permits you to trade 20 contracts, right, of Tesla. That doesn't mean you should be putting on 20 contracts of Tesla long or short because you think you're going to make $1,000 in a trade. You can, but you can easily lose $2,000-$3,000 just as quick, right? Why not play 2 contracts, take $100, extract $100, extract $200, do that time and time again, get comfortable with your system, get comfortable with your processes, and then kind of scale up by 1 contract after that. Now for futures, I will trade a lot of micros. So I start off the day trading micros, right? So if you don't know anything about futures, micros are a lot slower of a mover. It's only $2 per point versus the $25 per point if you're trading the minis, right? So I will start off trading 2 or 3 micros, and some people may think you're not going to make that much money trading micros. Well, today I traded 80% micros and made, I think it was $600. I mean, I'd have to pull up the P&L here. So if I kind of look at what's going on here, $626. Oh, you guys can't even see that. So if we look down here on the right-hand side, the $626 was all being traded with micros, right? Micros. So you don't need to put on a ton of size to make decent money. And a $600 day is fantastic. That's a fantastic day. If you can do that 2-3 times out of the week, you're talking about anywhere between $1,500, $1,800 a week times 4 weeks. Obviously, you could be looking at $5,000, $6,000, $7,000 a month. Now, mind you, you're not always going to make $600 in a day. You're not going to win 5 days out of the week. Some days that number might be 1,500. Other days it might be 200, right? So being realistic with your expectations is one thing that definitely comes along with trading as well. Kind of going off on a tangent again, but let's go ahead and look at the triple Qs. As of right now, triple Qs on a 1 hour time frame do have room to push up into 320. So I could see a 320 push before there's any type of significant pullback. If we do have some sort of rug pull this last power hour here, I could see a back test of 318 and 317. Again, nothing changes for the bulls. They look absolutely fantastic. Let's take a look at Tesla. Tesla still has some work to do here. We'll start off with the daily time frame because this is exactly what I wanted to look at. So Tesla has come down here. Tesla below, 175.91's got room down to 171. That will be a short position that I will take if the market decides to take a little bit of a nosedive. As of right now, Tesla is going to be running into support around 188, 189, and Tesla really doesn't start to break this downtrend that we've been in for the past 2 weeks until it starts to get over 195 and 200. Over 200 is a different story for Tesla. Now it's going to have a lot of room to run. Right now it's going to be a lot slower of a mover, even though, right, it's up $5 on the day. It's going to be a lot more choppier. It's not going to feel as seamless. There's definitely ways to make money when a stock is, coming off of a 2-week downtrend. So if we kind of go back to what I was stating when I was looking at the S&Ps and looking at the Qs, if you kind of just take this opening range candle here, so for example, my opening range candle is the first hour candle's close. I'm going to take the top wick. I'm going to use that level. I'm going to correlate that with what's going on my chart as far as the supply and the demand zone. What levels, what moving averages do I have right there? So if I'm looking at the 6 a.m. candle, the first 30 minutes open, we come and we push right into the 50 SMA on a 1 hour time frame. If we kind of look at what's going on above that, well, we really don't have any supply until 185, 186. So from a price of 184.25, we potentially have around $1.50 to almost $2 worth of room that we can potentially play if we get that confirmation. This is exactly the long trade that I took here. I waited 30 minutes for the market to kind of digest and open up. I waited for that price action to pull back, and as soon as it started to take out that level, I went ahead and went long, right? So I went long. So if we use the 5-minute time frame, because that's where I manage my trades, right? I manage my trades on the 5-minute time frame. I get my pivots from the 1 hour. I correlate that with the daily, and I manage my trades using the 5-minute time frame. So if we kind of look at where we're at here right off the open, so if this candle here, I hope you guys can see this candle here is the 6:30 a.m. candle. A lot of price action going up and down, up and down. If you notice this blue line here, this is a level of supply on the 5-minute time frame. So this also is correlating with that level, that 50 SMA on the 1 hour time frame that we just went over. If we get the breakout here, I want to get long. Okay, so what is my stop loss? My stop loss is going to be, depending on the amount of risk that I want to put on the trade and depending on how many contracts I put on, my risk, if you want to keep it tight, would be any close below the 5 SMA. If you want to give it a little bit more risk, any close below the 10 SMA. My absolute max pain is a close below the 20 SMA on a 5-minute time frame. That's how I manage my trades. Okay. Another way that you can manage your trades is take your entry candle. Okay, your entry candle. This is your reason why candle here. Why am I getting into the play? Because we just took out the opening range highs. I can use a close below that candle's low as my stop. Now we broke it 10 minutes in a row here, but yet we never closed below it, which means that we never would have gotten out of this trade. And if we kind of look at where we pushed up to, okay, if we kind of look at where we pushed up, your entry would have been somewhere, depending on slippage and depending on spread, your entry would have been somewhere between 183.50s and let's call it 183.60s. Okay, we pulled back for 10 minutes. We closed higher. No reason to get out or panicked out of this trade from 183.50s all the way up to a price of 185.20s. Almost a $2 move, guys. And this is a matter of 5, 10, 15, 20, 25, 30, in a matter of 30 minutes. Now, again, you are never going to catch the top. You're never going to know that that's where we're going to stop, right? You can have a good indication. Why? Because we have a trailing Bollinger Band up here. This Bollinger Band up here is going to kind of tell you, hey, every time we kind of hit this level, we're going to pull back into support. We hit this level, we're going to kind of pull back into the next support. If we break these levels, right? Well, what's the next area of demand? Well, we have our Bollinger Band, our trailing Bollinger Band. We also have a 50 EMA, and we've got the 50 SMA. You kind of see why I have all of these lines on my chart. I like to know that if we break this demand zone, what's the next demand zone we're coming to? And if we break this one, what's the next one? And if we break this one, what's the next one, right? So this kind of gives me a clear indicator. I can see the true range in between these supply and demand zones and kind of make my own judgment. Is there enough room in the trade for me? Now, you know, just because we lose a 5 SMA and the 10 SMA is sitting 10 cents below it, am I going to take that short? Of course not. There's not enough room, especially if you're trading options. If you're trading options and you don't have, especially on a stock like Tesla, you don't have $2-3 in the trade, I would advise against taking the trade. But if we look at that initial long trade that I took, anything over 183.27 had room up to 187. Obviously, we didn't get there. We're trading at 185, but you can see that there was a hell of a lot of room in this trade that if it did start to wake up, we've got enough room to kind of push up so I can make some cash. That's it. So again, I mean, we push up higher than where I took profits at, right? But at $1.50, $1.60 on 10 contracts on Tesla, that's all I need, right? I don't need any more than that. Is it nice to catch 2 or 3 points? Sure. But my anxiety and stress also rises as I'm holding more, hoping for more. I understand we have more room in the chart, but I'm okay with $1.50, $2 on a stock like Tesla on 10 contracts. Let's take a look at NVIDIA, see what NVIDIA is doing intraday here. NVIDIA, we'll start off with the daily time frame very quickly. I'd love to know what you guys traded today. Did anyone trade at all? Are we green? Are we red? Let me know. So NVIDIA, our line in the sand still remains. That price is going to be 263.30 to the downside. If we do start to lose that price level, we have room all the way down to the rising Bollinger Band, which is also contracting. If you look at the Bollinger Bands here, look at the Bollinger Bands coming down, look at the Bollinger Bands coming up. This is going to get nice and tight here. That's telling you that a big move is coming. Now, is the big move coming to the downside? Or is the big move to the top side? We won't know that until price action gets confirmed. So there's no sense in guessing where potential price action is going. Let's just wait for the confirmation and then we go with the trend of the confirmation. So as of right now, 263.33 still remains my short entry on NVIDIA. As soon as we confirm that, I will take my entry short. Now, if we look at the daily time frame, we've still got a lot of work to do before I'm comfortable going long in NVIDIA. I'd like to see it get over 272.50s. Over 272.50s reclaims the 5 and 10 day moving average. That's exactly what I'm going to be looking at. I want to get that daily candle close over that level, and I want the preceding day to take that level out, and then that's where I'm going to play my long position. If we're looking at an intraday kind of time here, and we're looking at the 1 hour time frame, we can kind of see here where potentially all of this supply and demand is going to be at. So if we look at where we're currently trading right now at 267, we've got supply at 269 and 270. We really don't have any room to stretch until we get over 272. So unless you are a fortune teller or you're a psychic, right, where you timed this bottom here in pre-market, right? We came down in pre-market, we held pre-market lows. I know a lot of guys who do this, right? I know a lot of guys who do this. They'll take a look at the after hour session. They'll take a look at the pre-market session, right? And this is what you'll do. You'll take whatever's lower, right, between pre-market and after hours from yesterday. You'll take this low, okay? You'll take this low. You'll draw a trend line here, okay? You'll look at the opening range candle, which is that first hour candle that opens up. You'll let it kind of disperse, right? If we don't close below the pre-market or yesterday's lows or yesterday's after hours session lows, and we bounce off this level, they get long. They get long. They'll use this as their stop. Like if you were to get long off the open here after we dipped below these moving averages and reclaimed them, your risk would have been from 265 down to 262, that's a $3 risk. I mean, that's a hell of a lot of risk, but I know people that trade that way. You'll see people that trade that way. You know, maybe if you're trading one contract, it's cool, but you know, when you're going in a little bit heavier size, 10, 15, 20 contracts, you know, $3 risk is just way too much on options. You know, I'd rather wait for the next setup. As of right now, NVIDIA still hasn't really given us a clear setup. We're still very trapped. I'd like to see NVIDIA get over 272. Over 272, I'm a lot more interested in NVIDIA to the long side. And again, below that 263, 280, 286, I'm interested in NVIDIA to the short side. Let's take a look at Google. Google's really strong, up 2.5% on the day. So the same thing kind of here with Google, right? If we look at the pre-market session, we open up and we kind of take out that early pre-market session, kind of put in this new high here at 107, and then we've traded as high as 107.50s. So it hasn't really provided a ton of opportunity. You know, if we kind of look at a 5-minute time frame to kind of get in a little bit of a macro picture here, right? Here's how you can kind of play this, right? So if you look at this candle here, right? And let me go ahead and pull out my drawing tool. If you look at this big green monster elephant candle there, if you're an aggressive scalper and you have identified yourself as a scalper and you can handle the emotions of playing opening range breaks on a 5-minute time frame or a 2-minute time frame or a 1-minute time frame, you've identified that you're okay with taking $1, you're taking $1.50, 50 cents quickly, this play was for you, right? So here's how you mock this up. If you notice on my chart, this blue line here, right? You notice this blue line here. This is a supply zone called the linear regression channel 50. We can see one up top. We can see one here. We can see one here, right? It just gives me tops and bottoms in channel form, right? So it kind of lets me know that if we break into one channel, potentially we could be heading to the next one. If we lose a channel levels low, potentially we can be going down to the next one. So all I'm focusing on here is look at where we stopped in pre-market on Google. You can't even make this shit up, guys. Look at where we stopped. We stopped exactly at supply. Exactly at supply. So if you've identified yourself as a scalper and you can handle these emotions, then immediately off the bell, you're taking this long. What are you using as your stop, right? What are you using as your stop? A close below the 5, 10-day moving average, depending on how much risk you want, and your max pain becomes a close underneath the 20-period moving average. How much risk do you say that is? So if we're kind of looking at it, right? If your entry price is going to be on a break of the pre-market highs into the next channel, right? And where our entry price is going to be somewhere around 106, then potentially any close below 105.80, which is about 20 cents of risk, or any close below 105.60s, which is a potential 40 cents worth of risk, or max pain at the 20-period moving average of 105.48, you know, giving us about 50 cents, 60 cents of risk. Those are your risk parameters, right? So understand your risk before going into the trade. It takes 2 seconds in the pre-market to analyze this shit, right? So you pull up your charts, you like Google's daily chart, you like the chart for whatever reason, you like the chart. We're looking at what we're doing in the pre-market, not a whole lot of action. We see we get this initial pop in the pre-market, you know, that 6:25 a.m. candle stops right at supply. Automatically right there, I'm doing this math in my head. Okay, if I'm to take this trade, if we close below, you know, the 5 or the 10 or my max pain at the 20, how much am I going to risk? Okay, maximum 60 cents, 70 cents. I'll take that trade all day long because we're breaking into a new channel level. Potentially, we have room to come up to 107.54. So from a price of 105.90 to a price of 107.50s, there's more than enough room in that trade for me to take on Google. It's $100 stock, right? We're not gonna assume that this is going up $5. And again, I have a feeling that a lot of people, newer traders or inexperienced traders, feel like when they play options that the stock's going to move $6, $7, $8, $9, right? Like you have to understand the ticker, understand, you know, the way that it moves. Like if you're trading Apple or AMD or Google, you know, you're not going to get an 8-point move in a day. Now, could it happen? Maybe, but it's not the norm, right? It's not the norm. It's not like trading Tesla or trading Nvidia and getting that 8, 9-point move in a day, intraday. That's completely different. So yeah, you would take this here, and to be honest, I mean, from a price of 106 all the way up to 106.78, 10, 15, 20 contracts, take 75 cents, boom, $400 very quickly in the first 5 minutes. Turn your computer screen off, go get coffee, go for a walk, go take the wife out, take the girlfriend out, take the side piece out, whatever you got to do. Go back to bed, doesn't matter. Go to work, doesn't matter. You're done at that. You're done at that point. You're done at that point, because you want to know what's going to happen if you do decide to hold and you be a greedy SOB, is that it pulls back, maybe you sell, then you get in again, and then it pulls back and you sell. Next thing you know, you're sitting through all this chop and you're like, what the hell's going on? And then you sell and you just end up giving it all back, right? So anytime you get a play where it's that quickly, 5 minutes, and you're taking 75 cents, $1, $2 off the open, call it a day, guys. Call it a day. Market's going to be open tomorrow. It's going to be open next week. It's going to be open next month. There's no reason to keep pushing your foot on the gas, right? The sooner you realize that that you don't really need to be trading 100 times a day, that potentially 1, 2, 3 plays in a day could make you a fantastic living, permitted you're not trading $1,000 account. If you're trading $1,000 account, your whole objective is taking $30 here, $50 here, $40 there. That's your whole goal. How many times can I extract $50? If you're trading between $1,000 and $3,000, your whole goal is how many times can I identify my setup and take $50? Practice that for a month. Come back here, let me know how you did. Manage your risk. Manage your risk. Again, I never put a dollar amount on my risk, so I don't enter a trade and say I'm going when I'm playing options. At least when I'm playing options, I don't say, okay, if my options contracts are down $100, I'm gonna take my loss. What I do is I use these moving averages. Whatever the loss is at that point in time, is I'm going to take the loss. It's never going to be like a 70% loss. It's never going to be an 80% loss on my premium. The wins always will outweigh it, as long as you stay disciplined and as long as you follow, right? You have to stay disciplined and you have to follow, right? Your risk rules. Now, if I'm trading equities, which means I'm trading shares, I'm a small equities player. I'm only going to trade 4 or 5 lots, right? With 4 or 5 lots, it's 400 or 500 shares. I might put $1 risk on it, right? So if I'm playing, let's say 3 lots, 1 point is $300. 2 points would be $600. I might give myself that $1.50 risk on the potential trade, and I'm always looking to take $1, 70 cents, 80 cents, $1.50 on the move, right? So it's like a 1-to-1, 1-to-2R on that, right? So if we kind of look at that, and then when I'm playing futures, it's completely different. We'll have to get into that on another video when I'm playing futures. But again, we'll just continue to go down the line here. Let's actually take a look at the small caps. We'll look at the IWM. IWM is also up 1.5% today. We're going to look at the daily chart on the IWM, kind of chopping around, doing nothing but sitting in this holding pattern here. Been in a tight range between 170 and around 178. Again, today is green. Daily candle, we are over the 5 and 10 day moving average, which technically is bullish. Our next supply zone on small cappers is going to be 179.61 and then 180. So depending on if you're holding anything long here, just understand we are coming into an area of resistance that has been troublesome for the past month here, right? So 3 times we're getting up into this zone. If we do start to break below that 174, potentially we can come down to 170. Just kind of play it accordingly and understand what stocks are doing in the sector that you're trading. We're just going to keep it moving along because I really do not trade the IWM. We're going to look at Apple really quickly. Insane day on Apple, right? Insane day on Apple. So if we look at what Apple has done, right? We look at what Apple has done. 1, 2, 3, 4, 5, 6 days. The last 6 days from the highs of around 166, 167 has pulled right back into that linear regression. Right, so that linear regression that we pulled, that I was talking about on the previous stock, came into play here on the daily. As we got the breakout, we got the retest, and now we've got the official bounce. That's what you want to see. Anytime we get a breakout, you always want to see the back test, and then you want to see the bounce. This is when you play it. You play the bounce, right? You play the bounce. Anytime someone's playing a breakout, right? So the breakout level was here. Anytime you're playing the breakout, it's just a scalp. It's just a scalp, and you hold a runner. Right, and then you use break even as your stop. Where you really start to go in is when we get the breakout and then you get your retest, right? Now this becomes your stop. This becomes your stop, right? And you play the bounce, because even if we do chop around, we are looking for that type of move, right? And then if we don't get that type of move, and let's say we're playing the bounce off the retest and we chop around and we lose, well, then you pretty much got a break even stop here. I hope that makes sense, right? I hope everyone can see this. If this is the breakout, this is our scalp. We're taking money on the way up. Okay? We're trimming down our size and we're holding half size position. As soon as we start to pull back, we're going to get stopped out at break even. We're going to let this pull back to the original breakout spot. As soon as we hold and you see a daily candle take out a previous day's high, well, then that's when you get in. So if you're looking to swing trade Apple, you should be in Apple today, and preferably not up 5 points at the end of the day, but preferably you're already in this trade, and your stop now becomes here, right? It's very simple. It's very simple. Your stop becomes that, because if we do start to close below the breakout spot, well, look how much room down we have. We have room all the way down to 154. I hope that makes sense. You're playing this candle to potentially these highs, right? So that's what you're looking to do. And you're looking to take profits into these highs, and then you hold a runner to see if we continue higher. And if we do continue higher, well, then you have a runner that just continues to run, right? So I know we got a few people in here. What have you guys traded today? Anybody take any trades today? We just kind of hanging out. What are we doing? Got anything going on? I mean, we got the NASDAQ up 250 on the day. At one point it was up 300. We got the Dow up 381. Currently, IWM is trading up 2.5 points. NVIDIA is up $2. AI is pretty much flat on the day, up 50 cents. AMD is flat on the day. AMC is still on my watch list. It's flat on the day. GME is up flat on the day, up 40 cents. Meta is up $6.61. Hell of a move on Meta. Meta has been one of the stronger stocks ever since the gap and go. If we kind of look at the gap here, right? Look at the gap on Meta. Got this gap. We came down, kind of filled partial on this gap, and then it's just been an absolute rock star. That's one thing that, you know, a lot of people on social media, everyone's crying for a new bottom here. But if you kind of look at, you know, essentially from the beginning of the year of 2023, we're in a fucking bull market. So stop crying for the bottom. Again, Meta is now breaking out on a daily candle here. Meta up $6. What else? Microsoft, the soft man, right? So we got Mr. Softy up $5. Again, if you kind of go back to where we started at the beginning of the year, here, big pop, big pullback. This is February. I know that because February was an absolute shit month to trade. Everything was choppy, up, down, up, down, up, down. So if you kind of look at it, just what we spoke about on Apple, look at the daily chart on Microsoft. We have a big pop, right? Our breakout spot was here. Not only do we pull back to the original breakout spot, boom. So that is a perfect clean break and retest. Get the break here, get the retest. What do we want to do? Double bottom here, right? Got a rising moving average here. We go ahead and use our stop. Any close below that, we swing trade this back up to the top. Now, again, you could take profits here. You could take profits here. You could have taken profits here, 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 even here. It doesn't really matter at that point in time. It's a free trade, right? You're already in the green. You're already in the green. So I don't really know any other stocks to kind of look at. You can look at Shopify. What is Shopify doing? Up 36 cents. Hasn't really done shit. Ever since they split this stock, it's been an absolute joke. Did we look at Amazon already? Amazon's up $4. Monster move on Amazon. Look at Amazon breaking out here. Amazon breaking out. Amazon has room to 104, 105s, right? Anything over 105s on Amazon does have room to 107. Again, I would expect some choppiness between 103.50s and 105 on Amazon. So again, if you are long off the 50-day moving average here on Amazon, which again was a hard play because yesterday we did close below the 50-day moving average. So I had Amazon on my watch list short, right? Why? Because this is the first close below the 50-day moving average going back to almost a month. So if Amazon was going to confirm 97.75, I was going to enter short. That's the beauty of technical analysis, because if something does not confirm, we never get in. Even though I was thinking Amazon short closed below the 50, there's no entry because it never confirmed. Now, if it did, 97.60s all the way down to 96 and then 94 would have been the price targets. But again, reclaim the 50-day moving average on that slight gap up here. And now we're reclaiming the 5, 10, and 20-day moving averages here. Anything over today's high on Amazon, it's going to clear out this channel. So if we kind of look at this channel here, this little sneaky area, any close, right? Any close over this channel here tomorrow definitely has room to 104s and then 105s. That's what we would be looking at on Amazon. I'm going to go ahead and wrap this stream up, guys. Just wanted to kind of go over some charts in real time here and kind of look at it. I will see you guys all in the Discord. Those of you guys who join over and pop into the Discord, if you guys have any questions, that's where I'm at all day. You guys can find me over there, but I will see you guys all in the next one.